So if you search for industrial real estate, you're going to find my channel.
I already started recording, so I'm just going to introduce you. What's up, you guys? Today I have an interview with Chad Griffiths, who runs two channels. He's into industrial and commercial, mostly industrial, I guess. He's going to tell us now. Real estate, something that I really don't know much about, and I have a couple of questions, not only that you would like to know, but some questions I would like to know, because, I don't really know about industrial or commercial real estate. How you doing, Chad?
Christian, I'm doing really well, my friend. It's good to connect again. We've chatted a number of times over the past few months, and it's really good to have built a friendship with you. And it's an honor to be on your channel here.
Man, likewise. It's very awesome to find some like-minded people online, and we've never met. And one day maybe we will. I have other friendships across the states with my ATM business that we just became friends over the phone and over chat. And that's awesome. We did one interview I'm actually the first interview in Chat's new channel. The channel name is The Commercial Cash Flow Show. I'm going to list it on the screen. And he also runs Chad Griffiths. I'm going to list that also on the screen, where he talks exclusively, or he has actually a lot of guests, but they generally talk about commercial real estate and industrial, I'm sorry. So my first question to you is, tell us, what is industrial real estate?
Fantastic question. And just a little bit of background about myself. So I've actually been in the industrial real estate space since 2005. So I guess we're 16, 17 years now. And I've spent my entire career as a commercial real estate broker working in industrial real estate. Not only am I a broker full time, but I started investing in industrial real estate myself in 2014, and with some partners and various financing arrangements that we have, we've accumulated a portfolio of about $17 million right now. So we've built a pretty healthy portfolio, and I don't mean to brag, but just to say that I've got quite a bit of experience in the industrial real estate space. And I preface that by saying that I'm going to try to distill this down to the most simple terms possible. And there's always the risk when somebody tries to overly simplify something as complex as industrial real estate. But I wanted to give a little bit of background to say that I'm not going to try and simplify this for the sake of sounding smart. And because you kind of always want to like almost talk to like someone that they don't have any experience in it whatsoever, even though someone might have a lot more experience than even myself. But I would equate industrial real estate as, in the most simple terms, it's a building where things will either come to be stored for some period of time. It might be stored for a couple of hours. It might be stored for a couple of years, or it might be a building where things are worked on or assembled. And two real quick examples that I'll give on that. So on the storing side, it could be an Amazon fulfillment center. Something comes in, maybe it's a whole bunch of one product that comes in. You and I are both using some pretty good quality microphones. So maybe a big shipment of these microphones come into a warehouse. They're stored for some period of time, or perhaps they're broken down into smaller parcels and then they get sent out into delivery vans. That'd be like your traditional warehouse space. And then a manufacturing facility, which is like the other side, where things are manufactured, they're made, they're assembled. The one that I love to use is the Boeing factory just outside of Seattle. Mm-hmm. It's 4 million square feet, biggest industrial building by cubic volume in the world. And essentially, if you can envision it, all the raw materials come in. So all the metal, all the rubber, all the plastic, everything that goes into making an airplane comes into that Boeing facility. Then it's assembled, it's manufactured, things are produced from scratch. And then the ultimate outcome is an airplane, like a Boeing 747. Yeah. And once that's assembled, that goes out the door. So that's kind of like your manufacturing facility. But in a very overly simplified world, an industrial building is really something where things are stored. That's your warehouse, or things are assembled or made. That's your manufacturing facility. And once you can kind of like wrap your head around how diverse all those different types of uses are. Like I use airplanes as one example, but it's everything you could possibly fathom. Everything, right? Like our shirts, our headphones, the light behind you, the curtains, the construction materials to make our houses. Everything is going to be made at one of these buildings at some point and somewhere in the world. And it's also going to be stored. It's going to be warehoused at some buildings somewhere over the world. So it's a massive, massive industry. And I think what's surprising for a lot of people is just how big that it is. And there's not a great amount of information out there to show the true size of the market. But one report that I often go to was produced by NAREIT about 3 years ago, is 2018, and they identified at the time that the industrial market is about 20 billion square feet worth of inventory just in the U.S., and that has an aggregate value of 1.5 trillion dollars. Trillion. Like, that's the size of the industrial real estate market, but it works in the shadows, right? Like, most people don't, like you even said at the beginning of this, most people just don't have a really intimate knowledge of industrial real estate, because unless you've worked in it or have a reason to be interested in it, it just kind of is this obscure thing that works in the shadows that nobody really has any idea about, even though it's this massive, massive industry.
Yeah. I wonder, storage units, that's not warehouse. That's not industrial anymore, right? That's commercial.
Well, interesting. There's a little bit of
Hmm.
a debate, you might want to call it that, is that a lot of these self-storage units now, and I'm sure you're seeing this where you're at, it's definitely happening in my market, where you're starting to see these in more retail locations. I would still be willing to bet that most of these self-storage units are still going to be zoned industrial. And that's a whole different topic altogether. But a
Mhm.
municipality or the city or whoever's deciding what businesses can go into what buildings, they're going to have some zoning ordinance or zoning regulation, which is going to allow certain uses and prohibit other uses. I would be willing to bet that most self-storage is still in that industrially zoned category, although you might see some more progressive municipalities start to open that up, whereas they could perhaps get into some more retail or commercial zoning. But for the most part, self-storage has always been a subsector of industrial real estate. But it's just
Mhm.
storage, right? That's all that
Yeah.
that is.
I just I mean, I'm sure, I don't know, like you said, it's lurking in the shadows, because now when you say it, I know that there's residential, commercial, agricultural, and I know, because I studied for realtor, that I didn't want to become it. I didn't. I know there's industrial as well. I never, like, I read it and it's like, oh, they're just three, agriculture, residential, and commercial. They're not three. And now, yeah, there's different zoning. Some are, you're right. You're so right. I never thought of it. Like, and most likely most people don't think of that. Wow.
Well, the,
Okay.
the best thing that you can do is actually go through the exercise of exploring why there'd be that zoning, right? So the main reason that municipalities have adopted a commercial, residential, and industrial zoning is so that they can intentionally segregate those areas so that they're not together. And you
Yeah.
could imagine how awkward it would be if you lived in a house that right across the street somebody could open a manufacturing facility, right? Like that,
Yeah.
that'd just be like the quality of life would be terrible. The manufacturing company would be producing noise and odors and smell, like everything you could imagine. It'd be terrible. So most municipalities and like the vast majority will actually segregate their industrial parks into specific areas that are going to be separated from even commercial, but definitely residential, where there'll be some natural divide. It could be a highway, an interstate, it could be a treed area. There'll be some separation where that industrial park will be separate from the residential, for the very reason that you don't want to commingle those two
Yeah.
areas, for very understandable reasons.
Yeah, you're very right. Now when I think of, there's a couple of properties that I've looked at that they're marked as CG2, I believe it's here. It's commercial, but it's also, you can live there, but you can also use it for commercial purposes. It's like a house, but you can use it as an office, and they're close to dealerships. But
Hmm.
there are very few that are very close to a dealership, and everything after that is either strictly residential, also separated by whatever, road, river, forest, whatever. See, I
Hmm.
never think of those things. I'm always looking at residential, and I kind of, that's interesting to know. What made
Most
you? Yeah, go ahead.
Sorry to interrupt you. Most people have no familiarity with industrial real estate at all. Like one of the best things that I've heard recently was a guy describing industrial real estate, and he said the only thing I know about industrial real estate is when I make a wrong turn off the highway and I end up in an industrial park and I have no idea
Yeah,
where I am, and I'm looking around at all these like warehouses, manufacturing. He's like, I have no idea where I am, what I'm doing. All I'm trying to figure out is how I get back on the highway. So most people just don't have any familiarity, but it's a very big component of just the economy of our society, but it's not one that's often broadcast. So again, like I probably said that a few times. I don't mean to sound redundant, but unless someone has a reason to want to know industrial, whether they're considering investing in it or they have a company that needs industrial real estate, the general public as a whole just has no reason or desire to understand what industrial real estate is. So it often works out of the spotlight.
Is it, that's off topic. I got just 5 questions total that I prepared for you because, we can talk real estate until tomorrow morning.
Oh, all day.
Yeah, I'm the same. But is there a lot of competition just like residential, or what would you say? Would you say there's more in residential and less in industrial, or how do you see it?
Much, significantly much less
Less. Okay.
competition in industrial, and part of it is just going back to that point of if people don't have a good understanding of it. So if you're in a residential investor, or just let's even just more generally call you a real estate investor, if you've bought and sold a couple of houses, it makes sense that the linear progression of your trajectory as an investor is going to be to consider multifamily. You might just want to scale, you might have more money. Yeah, like that's just naturally where you're going to go. Like, why overcomplicate it, right? If you're an investor and you've bought houses, going to multifamily isn't a huge leap, but going to industrial real estate is a significant leap. And we could talk about it ad nauseum. Like, we could talk about it for days on how different the industrial real estate asset class is from multifamily. But the pure point that it's different, and because it's different, it requires a much steeper learning curve for a residential investor who's maybe bought 2 or 3 houses to now go and consider a manufacturing property. That's a big leap, whereas they can get into a multifamily property much easier. So I've found, and I've owned some multifamily myself over the years, I've found that there's so much competition because you've got those single investors that have bought and sold a couple of houses. You've got a professional like a doctor or a lawyer or an accountant that has a little bit of money. They want to invest in real estate. Multifamily is pretty simple. Like, you're competing against every real estate investor. Whereas industrial real estate, it's much more narrow because there's just fewer people that understand it. So I've transitioned myself from investing and dabbling in that residential side to exclusively having my investments in industrial real estate right now.
Yeah, maybe I shouldn't have posted that video. So
there's nothing bad with it though. Like, sorry to cut you off there, Christian, but I think that that's a good point worth emphasizing, is that I'm not anti multifamily or anti investing in single family houses. I think that there's people that have made a tremendous fortune and they've done very well in those asset classes, and they know it well, and they're studious about it, and they're passionate about investing in it. It's not a bad investment whatsoever. I just like industrial for some of the reasons that it offers, but there's by no means would I suggest that one is better than the other. Yeah,
I mean, there's food on the table in any industry, even if it's not real estate. People always say, they always say it's saturated. So everything's saturated. Let's accept that everything's saturated to a point. And you just got to go and do it or complain, pick one. Off topic question again, of my original 5. How does it work? You buy the storage facility or the manufacturing facility. Who is your client? You rent it out to a company who wants to store. That's easy. But if it's a manufacturing facility, somebody comes and plays their machines and starts manufacturing it? How does it work?
Yeah, and again, that actually speaks perfectly to how it's this opaque industry that just isn't well understood, because there's so many different types of tenants that are out there that the average person just wouldn't have any reason to actually know about it, because there's no benefit for you to know what type of tenants would occupy an industrial building if your focus is multifamily. So, but if you were to start, and this is what I actually recommend to all new investors, if you're considering industrial, is to actually just go and start driving through an industrial park and getting a sense of all the different types of tenants that are out there. I came across one the other day, actually, when I was going through this exercise with a new broker in my office. We found a business that all that they do is service arcade games. So if you think of like not even like Pac-Man, because that's even like way too old, but like some of these modern arcade games, there's restaurants and bars and people have them in their houses and these things break down. This company occupied about 5,000 square feet worth of a warehouse space. So it wasn't a big space by any means, but all that they did was service arcade games. And you start getting a sense when you drive through these industrial parks of how many different types of tenants that are out there. I'll speak to two quick ones that I've had as tenants in my own portfolio. The first one was a company that just did maintenance on kitchen equipment. So all the restaurants that had stoves and grills and different kitchen equipment that broke down, they would have this guy come, and if he could repair it on site, he would. If not, he'd take it back to his warehouse. He'd work on it and tinker with it with all the parts that he had, and then he'd deliver it back to them. Okay. And at one point, he had like 50 different restaurants that were clients of his. That was the first tenant that I've ever actually had as an industrial owner. And the second one was actually a seafood distributor. So their main job was that they brought in raw seafood, they'd store it for some period of time, and then they'd ship it out to all the different restaurants that they had that were that they were suppliers to. And I could go on and give examples of hundreds of different types of companies, but I picked those three just because most people wouldn't think of a kitchen equipment supplier, a seafood distributor, and an arcade game repair guy as potential ones. But there's everything you can imagine, like everything.
You're right. All the stuff that comes, sorry to cut you off, I'm sorry, just all the stuff that comes, they come from somewhere. Somebody makes them somewhere, somebody stores them somewhere. You're so right. I never thought of it.
It's all made, it's all manufactured. And then there's raw materials that go to become semi-raw, which then are used in another process, and it's shipped, and there's all the logistics and the supply chain that's involved in it. It is an extensive industry of all the available types of tenants that will do it. But until you actually go through the motions of seeing who all these companies are, and the best way to do it, I haven't found a better way myself to introduce people to this topic, is to just go and drive an industrial park. Getting back to that original comment about how municipalities will segregate these industrial parks into areas, just look at the map of your city. And I'm willing to bet that the industrial park is in probably 3-4 different areas where they'll be hubbed. Pick one of those, go on a Saturday and just drive up and down every single road of an industrial park, and your eyes will be opened into the sheer amount of different businesses and industries that are in there.
Okay, that opens another question. I'm still, I was actually not chatting, I was writing another question. How about the rent? How long is the rent for usually? Is it 12 months like a residential? I highly doubt that's the case.
Well, that's one of the reasons that I like industrial real estate better. And again, just by my own experience and having done both. So it's anecdotal. It's not necessarily gospel. It's just what's worked for me, is that industrial leases, and I would even go so far as to say commercial leases in general, are going to be much longer. That first tenant that we had, which was a kitchen equipment repair group, we had them in there for 5 years. And they were in there for 5 years, and we had to do almost zero maintenance on that space. It was a triple net lease. So any increases in property taxes or insurance or whatever property level expense that came in, we passed that through to the tenant. And we knew that our net income was going to be protected for that entire term of the lease. The guy ended up retiring after, so we backfilled it with a small machine shop. But he was in there for 5 years, and I bet you I could count on one hand how many times I went to that space in the 5 years that he was in there. Versus like a residential property, can you imagine how many tenants you'd have over 5 years and all the problems that you'd have with just general maintenance concerns and things that come up? That's actually one of the real big reasons that I find as an advantage with industrial real estate is you can typically have a lot longer leases. So 3 to 5 years is common. It's also not atypical to see leases be even 10, 15 years in certain occasions as well.
Wow. Off the top of your head, can you explain triple net lease?
Yeah, so triple net lease. So most residential, and I'll contrast it against residential because I think that's where most people would be able to identify with. So most residential leases, you're going to charge a gross lease. So let's say it's somebody that's renting the unit from you. You sign them for a 1-year lease. You charge them $1,500 a month. That's probably going to be an all-inclusive amount. So maybe they have some utilities that are separately metered, But just to keep it simple, let's just assume that all utilities are paid for by the landlord. You charge them a $1,500 a month rent. Out of that gross amount that you charge the tenant, then you as a landlord are responsible for paying property taxes. You're responsible for paying insurance. You're responsible for paying any maintenance or upkeep. So if anything breaks down, that's going to come out of your gross revenue. That's a gross lease. And that's how most residential leases are going to be structured. Industrial, and again, I'd extend this even to commercial. They're typically structured in what's called net or triple net leases. And the terminology can vary. So I'd encourage anyone that's interested in exploring this is like, make sure that what you're actually looking at is true to what I'm saying. This is typical in most markets, but every lease can be structured differently. So I don't want to make a blanket statement and people think that this is just the way that everything is. It would, and that's actually just as a quick aside, commercial real estate follows contract law. So industrial commercial leases, it's all contract law. You don't have state or provincial legislation which dictates how these leases should be done. It's all contract law. So the parties can essentially agree to anything. So when you're looking at these leases, most of them will be structured in the manner where any expense will be passed through, or it'd be a flow through, another way of looking at it, to the tenant. So it'll be structured such that a tenant will pay net rent. That's going to be also going to be called their base rent. That's the amount that they're paying directly to the landlord. Then they're also responsible for all the operating costs of the building. So that's typically going to be property taxes, building insurance, common area maintenance. So that could be landscaping, snow removal. In my market, we've got snow, so that's an important one, and even management fees. So any increase, I shouldn't even say any increase, any cost of any of those get paid through by the tenant. So the tenant will pay their base rent or their net rent, and they'll also pay their additional rent or operating costs. And that's going to be their proportionate share based on how much space they occupy in the building. So if it's a single tenant building, they're responsible for 100% of the costs. The tenant occupies 25% of the building. They're responsible for 25% of those property level expenses. And the beauty of industrial leasing is that any increase in property taxes or any of those property level expenses flow through to the tenant so that it doesn't erode that net rent that the landlord collects.
Man, I'm in the wrong business, man. That sounds great. That sounds great. I'm going to look into it more often, more seriously. But again, we know each other, but I never really watched your channel, but I never really talked to you about that. We just did the interview where you interviewed me. And all those questions are really, I thought was going to be interesting for the viewer and what actually I want to know. How does the financing look like on industrial or commercial real estate? It's a little bit different, I'm guessing, the residential. By the way, Chad is in Canada. Before we continue with that, that's why he's saying some terms might be different terminology, and terms with banks definitely will be different. So how does it work where you are?
Yeah, great question, and thanks for clarifying that as well. Though there will be a lot of similarities between markets on what I'm saying, but absolutely check with your local experts. Like I'm a big believer in having a lawyer on your team, an accountant on your team, a broker, a banker on your team. And these are all questions that you should be asking wherever you are, whether it's in the US, Canada, or anywhere else in the world. That's an important distinction to make. But generally speaking, in my market, buyers are going to need to put down anywhere from 25 to 35% as the down payment. And there's banks out there that can put a second position on the mortgage, or they can just be more aggressive on that LTV. But generally speaking, if you want conventional bank financing, you're going to need to be in that 25 to 35% down range.
Okay. I'm not going to ask for prices because that's like how much a red car costs. You know, how much is the price of a warehouse? Well, how much does a red car cost? Taxes, terms of taxes and not taxes, but can you depreciate a property? For example, in the States, residential, at least is 27 and a half years. You can paper depreciate it.
Yeah, absolutely. Depreciation is a huge advantage of real estate in general. So you can absolutely depreciate commercial real estate. I believe in the US, it's 39 and a half years. That's the number that comes to mind.
That is it. Yeah, that's what commercial.
Yeah, on what you can depreciate over. But taxes is a good comment to bring up. So in my city, the they group it into either residential or non-residential tax base. There's also a third category of agricultural, but for the purpose of the discussion, it's either residential or non-residential. Non-residential being industrial, office, commercial, anything like the name implies that's not residential.
Yeah.
And the non-residential tax rate is about 2.4% higher for non-residential versus residential. So for every dollar that you spend in residential tax, you're spending 2.41% in non-residential.
Mm-hmm.
But going back to that original point about if the lease is structured such that it's a true net, triple net lease in there, you're passing those costs on to the tenant anyways. So it shouldn't have a massive impact, other than if taxes get too high, then that's less that you'd be able to charge the tenant for the pure standpoint that the tenant is always going to consider their gross amount, even though you're breaking it down as to net rent and additional rent or base rent and operating costs. The tenant is always going to look at what their true bill of renting it is. So they're going to implicitly include those property taxes as part of their rent. So if property taxes get too high, then that's going to put a constraint on how much you can raise your net rent. But again, all things being equal, if it's a competitive space and the tenant is looking at two options, one of them is yours and one of them is another property, if they're priced accordingly, you've got a really good chance of either keeping them or attracting them.
Yeah. Okay. Do you want to talk to us? What do you own, or how did you start, at least how many things you owned in the beginning, if you don't want to disclose what all the properties you own, or whatever you think the viewer would like to, okay, I own like a manufacturing facility, this and this happened there, that's the deal. Any deal that you want to tell us about?
Yeah, I'm a pretty open book. I'm happy to chat about any of this
tell
stuff.
us, I'm just by myself. Yeah. Okay, tell us.
Yeah, so I still have one residential condo that I own with a couple of friends, and we've just owned it for a long time and hasn't been really much of a need to sell it. So I've owned it for a long time. I don't have a lot of money in it, so it's not even on my radar. I have my own house. I started investing in 2014. I bought a small industrial condo with a partner. We added another one the next year, and we've slowly, well, I shouldn't even say slowly because it's accumulated quite quickly, but we're at the point right now after adding basically a property every year. We're at 6 properties. We just closed on another one for about 4.1 million. We've got about $17 million in assets. But we've got partners on all of that. So we haven't done any syndications, or like I haven't sponsored any of these. These are ones that we've set up a separate corporation or LLC for it. And we've got our own capital in it. We've got financing on it. We've got various partners on these. So I guess if you look at it from a whole standpoint, we've got about $17 million that we have our own equity into it. But again, we've got partners on that. We've got debt on all of that. So it's not as impressive as just saying we own 17 million outright. Yeah. But we've got a decent enough portfolio where I think at last count, we're up to 29 tenants in that portfolio. So those are all industrial tenants. Are everything that we have is within a 20-minute drive of my home office. So I can get to all of these things really quickly. And the goal is to keep adding a property a year. That's our goal, is that I'm still an active broker. So I still make the majority of my income by being a broker, but I want to use the money that I make carefully and intelligently so that I can reinvest that back into something that I know really well. And the end goal is to just keep accumulating properties, keep growing top line revenue growth, get some appreciation, pay down mortgage. And over time, if we can get to a position where we have enough properties cash flowing, then that's a pretty good way to enter your retirement years.
Yeah, you ruined my next 2 questions. I was gonna ask you what your plans are, of doing, and what do you do? Is that what is your full-time job? And
well, send me a curveball then. I'll literally answer anything. I'm transparent. What's on your mind? I'm willing to answer anything.
No, I know.
You want to talk politics? You want to talk religion? Let's get some curveballs going here.
No, that's all I had for today. And I was like, let me see, because, we're talking about it. I'm like, I don't know if that's all you do. Maybe you have a job, because I also have a job. But you mentioned that you work as a broker. And you control 17.1 in assets. That's obviously mortgaged. That's not all you guys own. How many partners do you have?
I'd have to go and take a look.
There are a
It's
lot.
I've got one partner on everything that I've done. Him and I are business partners as brokers, and we're also partners in everything that we've done. And then we've got various partners on different properties, just depending
Mhm,
on on the situation. Just as a guess, I would say we've probably got 10 other partners, and it's
mhm.
all like very close family and friends.
Yeah, because I'm considering I haven't done anything with a partner. I kind of stay away. So it's interesting when somebody else has partners just to see their experience. Do you have any bitter experience? Do you get into a lot of altercations or everything is laid down in a contract pre-hand and then you just vote on if something comes? How does it work
Yeah, I
in
mean,
your experience?
I guess we're somewhat new into our experience because even the first few properties that we bought, it was my partner and I, or like very, very close friends. So we haven't had that contentious situation arise. I would like to avoid that as much as possible. And that's
Yeah.
one of the reasons we haven't gone the syndication or fund route, is that I don't want to have a bunch of partners that I don't know. I'd rather be invested with people that believe in our vision and want to come along for the ride, whether that's 5 years or 10 years or 20 years. And they just trust our judgment to manage the investment because we're also personally invested the same that they are. We've invested every single amount as they have. And I'd like to think that they're comfortable with our decisions and recommendations versus going out and doing like a syndication where you sponsor a deal and you've got none of your own money in there and you're trying to make recommendations and the group is saying, well, we think it's time to sell or we need to get out. I think there are problems that arise, and a guy that syndicates deals that'd be an awesome guest to have on your show, Christian.
Yeah.
But for ourselves, we haven't. I get along very well with my main partner, and we've been selective on who we've brought into it. So we haven't personally. That's not to say that there won't be problems that arise down the road, but I think you got to go into it with the approach that there's always the potential for problems, but until a problem arises, there's no point wasting energy and all the negativity that comes with it. Just assume that everything is good to go for the time being. And if a problem arises, then just make the best decision you can with the information you have available. But to worry about what could happen or all the negative things, I think that just bogs down your mental energy and takes away from your ability to try and always move forward if someone's trying to pull you back. So we've been fortunate. We haven't had any issues, but my approach would be if someone did have an issue, well, let's just come up with the best solution that works for everybody.
Yeah, I'm looking into maybe getting something with a couple of partners. No plan of house, commercial, residential. Maybe you give me a good idea for industrial, so maybe I'll look for industrial partner
Mhm.
after I research a little bit more. But I've done everything by myself so far, and I see other people who grow faster because they have somebody, they have like three partners, each of them brings something to the table. So it's easier like that, I'm guessing. I don't have the experience, so that's why I'm asking.
Yeah, in my experience, having done this at a decent level, it's actually quite easy finding capital once you've got a track record because people just want to join in on what you're doing, especially if you've been able to prove a successful string of events. So it's much easier finding capital. It's much harder finding strategic partners that actually bring something to the table, and that could be just another professional. Like if you were to partner with an appraiser or a lawyer or an accountant, those guys just bring skills
Yeah.
that you or I might not have. So for me, I think that those types of partners bring a lot to the table. I'm less interested in trying to raise capital than I am to making sure that someone has something to bring or they at least share my vision for it being a longer term goal as opposed to trying to flip a property and get in and out of it in 3 months, because that's just not something that I'm pursuing at the moment. So it's being strategically aligned with whoever you invest with.
Yeah, I agree with you so much. Recently, just for shits and giggles, I posted on my Facebook because I wanted people always like complain that, oh, real estate is so expensive. And I'm like, okay, so I posted on my Facebook and I really, I'm going to have a video on it. Maybe our video is going to air after it. It said, just for YouTube purposes I'm looking for 15 people to invest $1,000 so we can buy a house.
Mm-hmm.
In 8 hours, I had a little bit more than 20 people. And some of them were like, can we invest more? Can we be less people, but invest 5K or 10K a piece? So, if we're 4 people, we get $40,000. And I'm like, okay, so like you said, to your point, finding capital is easy once you prove a track record. And I'm guessing people see something that I'm successful in. So they're like, oh yeah, sure, we'll give you $1,000 because $1,000 is a very small barrier for most people can get $1,000. See, 10K an hour, it's talking a little bit more of a number for most people. That's why I wrote 1,000 on purpose. Turns out that comes with its own, if you're more than 5 people, it comes with its own hoops you need to jump through in financing and pulling credit and so on and so forth. But long story short, to your point, I totally agree that finding capital becomes easier after you prove that you're good for you're successful in a certain area. But finding somebody to share your vision, your goal, or a professional, it's a little bit harder. So I guess we definitely agree on that one, that for both of us, it's kind of, for the professional part.
100%. You'll notice this too, Christian, when you start like developing out your brand as being like a real estate entrepreneur that's finding opportunities and managing them appropriately and then devising an exit strategy where everybody profits. You'll discover quickly in real estate terms. Like I'm a big believer that real estate needs to be a long-term endeavor. So when I say quickly, I'm talking like could be 5 to 10 years.
Yeah.
Maybe even longer than a few years, but you'll discover very quickly that your ability to raise capital will grow exponentially. So where you look at it right now and say there's a lot of people that have $1,000, you'll start developing a reputation. You'll increase your network where you'll start saying there's a lot of people that have $100,000. And then you might even start raising it where you're saying, I really want to have guys that are going to come into this for $500,000 or $1 million, because there's those types of investors out there that want to be passive investors, but that don't want to actively manage it, that look for guys like you to go and see it. So I don't want to divert away from the awesome questions you've asked on this, but I would say that right now your sphere is to say guys can have $1,000, and that's not a lot of money, but there's guys out there that would say the same thing about $100,000.
Yeah.
So you're doing all the right things, and you'll get to that level where you're running with investors that have that type of capital to invest.
Yeah, it took me a while to learn that don't use your money, man. You don't have to. You can, but you don't have to use your money. It took me a while. I'm from a different country, communism taught very differently. But
Yep.
Anyways, man, Chad, thank you very much for coming on the show. I'm trying to keep it under 30 minutes. I don't know if we could, but we definitely going to do that sometimes if I prepare more questions. If you guys have any questions industrial, leave them down below. I'm going to bug Chad to answer you. And check out his channel. I'm going to list it I listed in the beginning, and I'm going to list it right now as well. And, thank you very much for watching. You know what to do with the like and the sub. Follow Chad's channels, both of them, if you're interested in industrial or real estate in general.
Thanks, Christian. Thanks so much for having me on the show.
See you guys. See you, man.